Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm Samantha Voon and my co-host here with me, Brian Fernandez. It's the 13th of June and our guest today is Kian Soon, CEO of Astral Asset Management in Singapore. Kian Soon, good afternoon.
Good afternoon.
Brian.
Now, let's take a look then at how markets in the region are performing right now. We start with the Nikkei. The Nikkei 225 is down 0.15%. Shanghai is down 0.3%. But the rest of the region is in green territory. We've got the Hang Seng, which is 0.25% up. The ASX All Ordinaries is up 0.55%. The Kospi is up a whopping 1.47%. The Straits Times Index, where you're at, Kian Soon, is up 0.42%. And rounding up the numbers, we've got the KLCI over in Malaysia, which is up 0.26%. Now, Kian Soon, your views on market performance in the first half of the day?
I think without surprises, the market in Asia is doing well because of the positive follow-through. Yesterday evening, we have the record setting of Nasdaq as well as S&P 500, and I think the Asian markets are following through.
Okay, so Kian Soon, it was a really unusual day yesterday to have the announcement of the Consumer Price Index CPI and also the FOMC on the same day. So we had the CPI fall slightly from 3.3% for May versus a 3.4% in April. So the FOMC, however, held its key rate steady at 5.25 to 5.5. So, Kian Soon, what does this actually mean? And also, what should our viewers be looking out for?
I think without any surprises, nobody expected the FOMC to touch the rates this round in June. Basically, they maintain the rates, and they actually come out to actually announce that there's only going to be one rate cut, expected rate cut for 2024. And this is very different from what we heard in the beginning of the year, which is 6 rate cuts. By March, we heard that it's going to be 3 rate cuts, and then now, it's coming down to 1. So, it's managing the markets. At the same time, I think the Fed has been cautious. Even though the inflation numbers has sort of cooled down a bit, they're still waiting for more data and adopting a wait-and-see approach.
So, Kian Soon, given that perspective then, how should investors read this? Because amid all this exuberance around markets, everything is at record highs, your Apples, your Nvidias, and so forth. There's a lot of exuberance in the market. At the same time, now that the fact that we are only probably going to have one rate cut telegraphed, how should Asian markets in particular react? Because we've had rate cuts already now from the ECB.
Not only from the ECB, actually, rate cuts from from Switzerland, Sweden, ECB, Canada, and all the other countries are just one after another looking at their own situation as well as trying to follow the United States. As we have seen, right, it seems that US is now the slowest in the game in terms of rate cuts. We've seen that in a lot of markets, pulling the trigger already, mainly because they think that the economic slowdown is pretty severe in their own respective economies. There's a need to cut down interest rates, or they think that inflation is well under control, and so they announced the rate cuts much earlier than anticipated.
But one of the things that on the Asian side we should be cognizant of is the fact that the interest rate spreads will get wider if Asian markets cut rates, and that's going to have an impact on currencies and shift money flows towards the US. Do you see that happening?
We already see that happening, mainly because the interest spread, like what you mentioned, has been very wide. For instance, between Japanese yen and US dollars. So we'll see that if the Asian emerging markets cut their interest rates, potentially that will exacerbate the problems, like what you mentioned. The fund flow, so US dollars has been phenomenally strong for a couple of reasons. One, interest rate spread. Secondly, also the shift towards other currencies like US dollars, especially when you have two ongoing military conflicts. So there are a couple of reasons, and thirdly, I think in terms of what is really pushing Nasdaq to record highs, is basically the drive for to buy companies that are related to artificial intelligence AI. There has been a strong push for the technology counters, and everybody is just trying to invest in any of these companies that has some kind of relationship with AI. Beyond what you hear, what you see on the tech giants, the next order of play is already coming in, right? You just can't have AI algorithms or AI chips, but you also need the AI software, AI data warehouses, etc., etc. So you could see a lot of capital shifting towards the United States to invest in such arenas.
Mhm. All right. Thanks for speaking to us, Kian Soon. So, sorry. Uh, okay. So we've been speaking to Lee Kian Soon, CEO of Astral Asset Management in Singapore on BizTech Asian Midday Market Watch. I'm Samantha Voon.
And I'm Brian Fernandez.
And this show will be on our website, www.biztech.asia, as well as our social media platforms. It will be on our syndication partners' TV stations, radio stations, and website. Thanks for tuning in.
Thank you.